And we're live. Hey guys, it's Will. Hopefully you're having a great day today. In this one, we're going to be going over BigBear.AI and some of the movement that happened in the market today. We were in our live session this morning. There's been some good insights. If you ever want to tune in live at market open, it's going to be the second link in the description below to join Stockmates. We were trading the data center market and we had some volatility today. As you can see, markets had some red in the data center markets. The AI markets, or basically every single market today, had some corrections. As you could see, some of those pull downs, and we were looking at BigBear.AI over the last few weeks, and we traded it. We had a very profitable trade earlier this week on BigBear.AI in our daily live trading session. But on top of that, there's a few things that came out recently that changed the game for BigBear. One of the things was an acquisition of AI. The other thing was that they massively increased their cash. But then the other negative catalyst that happened today is they just broke a key level of support around $6.50, which might end up acting as a resistance now if they can't rapidly recover and just call this more of a zone of support around 650. Hopefully that's the case. They continue back up from 650 into these levels around $7. That would be a 10% gain from here to continuing their uptrend into that $7 or $8 range would be a 15 to 30% increase. That's kind of what we were potentially looking for in the bull outlook. But in the shorter term trade outlook, now I was just looking at Prophecy app, and you could see, we were just talking about this yesterday too, that we didn't want them to break this support level of around 650. Now that they broke the support level around 650, the next level of support here, according to AI, is at $6. This is Grok. This is the Grok model. And the next month, though, looks bullish. But when I look at the next day, it was fairly bearish, anticipating that $6.50 resistance may act as a support. That $6.50 support that they just broke may act as a resistance now. In that case, you might see some resistance there, maybe even a sell down to as low as $6 a share, but anticipating bullish momentum after that, back up into that $7 range. Maybe they still get rejected around 7. It looks like maybe even breaking back down to 6, but over the next 6 months into the next year, most AI models in the Prophecy app are bullish, anticipating as high as 45% gain on the stock over the next year, due to not just the technicals and the overall uptrend. So that's one factor, but you also got some of the news, which we'll get into. But as you could tell, they jumped from $1 a share this last year around this time. That's when we started investing in them and covering them here on the channel, to as high as $10 a share. And now they're back down. You can see this uptrend, this very consistent kind of build of market cap. And while they pulled back today, they've had a really nice run recently, and they're continuing to potentially hold this level. So we'll get back into the technicals in a second, but one thing to note about them is they're kind of like, how many of you guys have been in California? Like right now I'm traveling, I'm in Buenos Aires, in Puerto Madero. Beautiful place. Highly recommend anybody that hasn't been to South America, just go to Argentina, go to Buenos Aires, stay in Puerto Madero. It's beautiful. Great food. And hey, if we're here as well, maybe we'll see you. I'm here visiting my wife's family, and Tammy and I are here for the next 2 weeks through Christmas. And so when we were leaving, we flew through the airport, obviously. And when we flew through the airport on the way here, we flew through LAX. I'm actually from Northern California, but we first did something with Robinhood, as I'm kind of like a spokesperson for them, and we're doing some ads with them for investing. And first we flew to LAX, and then we filmed some stuff with them, and then we went now to here. And when we went through, they had the VeriScan technology that scanned my face. Now you guys might have known that. I might have told you guys that already, but the reason I'm telling you it here again is because it's kind of like in California, for example, they have this thing called PG&E. They're like the grid, the electrical grid, super popular, used throughout a lot of California. There's even been some debacles around the when there's huge California fires, the wildfires. There was some concern that company was responsible because why? Because they had uh, the grid could have started the fires. And so what I want to tell you was not that about the California fires, although that's interesting, is that when that company was expanding and first building all of their power lines, right, for the grid into the cities and into the rural areas and everything else, do you think that they were saying, pay us and we'll give you power? Not really. Not really. No. In fact, a lot of times what they do is they say, we'll pay you. Can you let us run our electrical through your property or through this easement or through the city or through this area? And we'll pay you, one time, or would you allow us to just run this electricity through? Right. So that whole framework is similar to what Big Bear has done. Yes, they've had some contracts, Department of Defense, government contracts, but their revenue has been pretty flat. In that time over the last year, they maybe had not a jump, but a notch of about 2% jump in revenue over the last year, and it was very flat over the last few years in their revenue. But they have increased their balance sheet to almost $1 billion in capital, with their total assets to 900 million. And they've done this infrastructure play where, yes, they partnered with Palantir and Redwire and some other companies, but factually, if you look at their balance sheet, they look great. If you look at their revenue, it's kind of disappointing, and you'd say, all right, $2.7 billion market cap, they're bringing in maybe 30 to 50 million a quarter. It doesn't look that impressive on the income statement, right? And the idea here is that they don't care about those initial revenue contracts from deploying the Veriscan into all of the airports, because they, when they have deployed this Veriscan technology into, it was recently Nashville. They're working in the Middle East, apparently. I know they're in Heathrow as well. And then they're in Chicago airport. But they primarily have deployed their Veriscan technology into all of these airports, and they didn't see any revenue jumps. They got into JFK, Denver International Airport, LAX, so Los Angeles, Port of Seattle, all these different airports, they got into them. But they didn't see any revenue jump. And so the question was, okay, well, how much were these worth? And then the earnings came out. We saw their balance sheet jump. They made a lot of cash as far as investment and capital grew over 800% in their cash. That's amazing year over year, but no revenue. And so the reason being is most likely they're positioning themselves for the data play, to get more data, to get more Department of Defense contracts, to get more government contracts with the millions of people that are going in and out of the airports, getting their face scan and everything else. Most likely that's going to have quite a value on where this company is operating from. And when they're preparing for the 2026, 2028 Olympics, the 2026 World Cup, that's a really big event, and most likely they're going to see more demand. So that's why, we're watching them from a fundamental perspective. They haven't really increased revenue, so they might even see some pressure down. They might even sell below the 650 more, down to that $6 price point. That's the next level of major support at $6 a share. And some of the AIs, while they're bullish, especially here in Prophecy app over the next year, some of them are anticipating that over the next few days and into the next week, we see them consolidate to sell down around the $6 price point. And most of them are anticipating that. There is a support level around 630 though. So it's possible that they dip down here 630. They don't break pattern fully and continue down to, let's say, 550, which in a bear case, it's healthy. It could happen. You can see their overall trend. It's fine if that happens. Their overall uptrend over the last year, it's healthy. But ultimately, if they hold that $6.30, they actually continue up. Next target's around $7 a share, but now they got to break out above 650. So watch that at market open, and then $7 a share to 8 or more, you're looking at 15 to 30% margin for profit. It's possible, we could see that direction. So we'll be watching it at market open tomorrow, and there's a lot of reasons that when you're looking at the markets, especially in AI, there's a lot of reasons to be looking at these companies, but just be careful, especially when markets are hot and you see all-time highs in the markets, that the first thing you got to ask yourself, and you don't have to, but this is what I always ask, is when you're looking at these hot AI companies someone's told you about, you hear about it from this person and that person, and every other person says this AI company and that AI company, and look how much hype there is, or this is going to be the next big thing. Almost always, what will protect you in these markets will be going back to the balance sheet, going back to the financials. And this is kind of what we programmed. There was this stock, I forget which one it was. Someone was talking to me yesterday and they said, well, this stock is projected to go negative, but everybody's saying it's going to be really hot. What's going on with this? I said, okay, let's take a look. And I didn't even really have to pull up the machine, but they were a machine user, the Prophecy app. They were using the Prophecy app. They said, I don't get it. Why is it negative projection on this stock? And I said, well, let me look at the balance sheet. And the balance sheet had way more liabilities than assets, way more liabilities than assets. And that was one of the indicators that immediately can lead you to believe this company owes more money than they have. And that means they could be at risk of what? Bankruptcy, debt obligations that would hinder their growth or be a bottleneck to their growth. And so very key factor is to look at the financials in these companies. I'm telling you, it's going to help you so much on the fundamental side to take a moment. Charts are one thing, patterns are one thing, we see them, but again, real world usage along with the financials will always be king in these medium term to longer term. We're talking 6 month, 3 to 6 month to 18-month time horizons on investments will do very well. On the shorter time horizons, those fundamental news do slightly matter less, you could say, because there's more charts that are being considered and momentum and probably Fed spending more, or let's say the money printing could be a catalyst, and you got things like that surge the market momentarily or tank the market, right? And so those are factors, but ultimately, like if you wanted to stack all the probabilities in your favor, one thing to do outside of having a clear plan of where you plan to enter and exit if you're on a shorter term trade is going to be the probability that they are seeing real world growth and profits in their business, and that they have cash, and that there wouldn't be the possibility of a bankruptcy announcement or anything like that, because obviously that would tank the stock. So just kind of putting that in your favor. So we'll see if any opportunities present themselves on Big Bear. We did trade BigBear.AI earlier this week. We made a killing, about a 10% trade, and we were trading data centers today. Data center market, TSSI, we were down about 250, I think, somewhere on that trade, as they corrected with the rest of the data center market. But data center market's looking very promising as well. Just a lot of volatility there. It's all part of the game. Long-term positions are up double digits or triple digits in some cases. So it's part of the game. There's short-term volatility. But when it comes to the gains we saw in Big Bear last time this week, we got a 10% trade. And we may be watching for something similar. If it does bounce here, we'll just see how it reacts at market open on Monday. So if you'd like to tune in at market open, watch my entries, watch my exits, and surround yourself with other investors, send me a message anytime. Would love to see you there at market open. It's the second link down below to watch our daily live trading sessions that we do Monday through Friday. Now, we don't always day trade, and it's also pretty early in the morning. If you're on the Pacific Coast, it's 6:30 a.m. Which is where I normally live, but we're there every day, Monday through Friday. It's a little easier on the East Coast, and now that I'm in Argentina, it's a little nice. But if you'd like to tune in at market open, then I would love to see you there. Again, a second link below, and there's a sale there you guys will love, and it's not getting better than this, so go take a look at the second link. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next one. Take care.